The S&P 500 and the Nasdaq 100 had a little bit of a pullback, and yesterday we had Jerome Powell talking on 60 Minutes regarding what's happening with rate hikes and when you can expect rate cuts to come. He almost gave a very specific timeline of when to expect those, although it's not going to be in March. And I'm going to spoil it real quick. He also said there's not going to be 6 rate cuts most likely, and more likely 3 this entire year. The market initially priced this into the downside, but yeah, spoiler alert, all hedge funds kind of agreed with me that guess what? They weren't going to cut rates at least until summer. Why? Because you got to get closer to their target. Because Jerome Powell said the same thing for the past year over and over and over. But there's a few stocks that we need to be looking at because there's very big opportunity. Let's not waste any more time. Let's get to work. Now, the first one we're going to look at is going to be the Nasdaq. When we go to the Nasdaq, we look at something like the 2 hour. You can look at the daily as well. But here on the 2 hour, the 4 hour, and the daily, you're making an ascending triangle with higher lows basically since the 5th of January. 1, 2, 3. And you haven't even come down to touch the bottom end here. Now, I get it. Everyone woke up this morning and you saw a little tiny dip and you were panicking. But spoiler alert, this has happened before. And guess what happened? Nothing was too different this time. We bought right back through it to the upside. You go into ES looking at the S&P 500, very similar action. But you would have liked to hold above 49.64. Now, when we go to some of these levels, it's important to make things very, very clear. Now, one level I am watching is right about here, 49.57, and locally around the 49.50 mark. So those are levels that I'm watching, and you're kind of sitting right above that level right there as well. This is more of a shorter term time frame level there and there. So you like the hold going on right now. You go into SPY, you go into Qs, you get a little bit more of an answer as well. You're holding right at that level 49.6. That was a level in which you wanted to hold. You had a decent close here at the end of the day, but it could have been a little bit better. I will say that you're trying to push back to the upside. You go into QQQ, you get a better answer. Also, you're damn near sitting at all-time highs as well. Also very good. But going back to NQ, I want to highlight that this isn't surprising that we're finding a top here right now, and it aligns with the all-time high thesis as well. You go to the daily, actually, yeah, we go to the daily and you can see here, this was your previous all-time high. As you can see, 1, 2, that's where you're at. This is back in 2021. Now, again, we escape and we go back to the 2 hour and you're making that ascending triangle there. I just want to play a food for thought and give you a visual on what happens when higher time frame ascending triangles play out and not on the 5 minute or 3 minute or 1 minute, which is majority of what you guys are using. Let's go to NVIDIA. When we look at NVIDIA, what happened here? Remember, everyone was bearish on NVIDIA when you sat at all-time highs and you basically sat there at 500 and an ascending triangle. Well, what happened? When you broke it, you proceeded to run another almost 50% on the stock. Now, everyone's been crying the big bad bear here, but guess what? All those people are just big fat losers. And again, when you look at the chart and you have a complete bias, not non-biased, but complete biased opinion, you're probably going to continue to lose. So I always recommend having a non-biased opinion, but which you broke out here. So again, when we go back to NQ and we look at what's establishing here, it takes me back to NVIDIA, right? Tech names are still incredibly strong. Rate cuts are probably going to come in the next 2 to 3 months, going into June, into the beginning of summer. And again, this is kind of the story and the narrative that I keep looking at. So as we sit here, you have to remain bullish. Sorry, I'm bearish, bullish. Tongue is getting twisted. Now, if we start to break down right here, this is my bear case. We make a lower low. So we shoot down and you break down. Breaking below 17.2, I would be bearish. I would be looking for downside, right? Because it would invalidate what's happening here. But until that happens, I think you have to continue looking for upside. And why would you bet against the trend? I keep seeing guys saying, I want to go short at highs. Well, congratulations. You've done that all year. And guess what? You lost. So yeah, best of luck. That's what I'm looking at right there. Now, again, it's really important if you're new on the channel to understand I approach the market from a completely unbiased opinion. I don't care which way we move. I just want to make money. Like when we look at today, one of my best trades on the day was Tesla breaking below 180. We talked about it all day live in Discord. It was something that we were kind of looking for, waiting for. You broke that low and you shot straight down to 175. It was awesome. Now, I'm not looking at the market from a viewpoint of I'm only going to trade the upside. Now, there's great opportunities on both sides of it. And again, you look at Apple, it was a good opportunity today as well. But again, when we look at the broad market, it's all about taking what the market's giving you, not trying to imagine a scenario that could play out and that would be cool. Feelings have nothing to do with this game here. If you continue to attack the market based on feelings, I promise you will be a loser. Again, you're going to get mad. You're going to say I'm conceited. You're going to say I'm cocky, I'm arrogant, and I might be. But when you come to this channel, you know you're getting the God's honest truth. I'm not going to fluff it for you. If I lose, I lose. I'll talk about it. I'll go into depth, why I lost, what I can change, and how I can learn from that. But if you attack from the viewpoint of blaming everyone else for your losses and never taking accountability, you know what? I can guarantee one thing will continue to stay the same. Yeah, you will be a loser. Sorry, today, tongue is tied. I'm a little bit tired. I'm a little bit exhausted. But again, the DXY, the 30-year yield, got me a little concerned. So this is the DXY. And a good friend of mine on Twitter, Colin Gladman, he actually talked about this. And shout out to that guy. Go follow him on Twitter. Good guy. You have a little bit of an inverse head and shoulders playing out, trying to break out, a little bit complex as well. So you had the nice breakout. You're pushing up. So the dollar has been running basically since Friday, right? We're basically since Friday, you've been just running here since non-farm payrolls. Now the US 30-year, the 30-year yield, not the bond, the yield, also has been running to the upside, kind of flagging, looking to break back into 4.4. Now, what I will say is the yield is still clearly in its range. The DXY is outperforming the yields here. You would love to see the yields get below 4%. That's where you turn into a mega bull on the market, and you would see housing start to catch on fire as well. And when I say catch on fire, I mean like in a good way, not a bad way. So don't get that twisted either. So that's what I'm looking for here. If you get above 4.4, that'd be a really cautionary red flag for me. But again, there's a few things we need to look at here. Now, what's really important, okay, to identify, and people like to ignore this for some reason. I agree. When yields go up, it's concerning for stocks, but we've seen the yields go up, we've seen the dollar go up, and the market also ignore that. And that's what's taking place right now based on earnings and what came out there. So again, you can see January 22nd, highs right here, January 24th. I go to Nasdaq. Well, where did we find our highs here? Again, just quickly looking, January 24th, you're at all-time highs. Again, you actually broke all-time highs right there, so you can see. Even though yields were running, you were still pushing up. Now, again, why was this happening? Based on earnings, based on what was happening from the Fed, based on CPI data, based on PCE data, right? Data was playing a factor. So not always are the DXY yields going to be completely in sync. That is worth mentioning. I will say when the market is resilient while the DXY is running to the upside and yields are running to the upside, it makes me really look at the market from a different lens. It makes me say, man, if these things start to pull back, which everything the DXY pulls back, you're still getting a lot of love in the market. So that's still definitely playing into effect. If that starts to happen in tangent, we might get a real explosion breaking out from all-time highs on NQ. Again, this is just my opinion. Don't shoot the messenger. Also, going back into data, I do want to highlight as we look at the performance trends over the past 5 years, February has been the second worst month when we look at the S&P 500. Shout out to our boys over at Edgeful. Link is down below. You get 7 days on the free trial there. But I also want to talk about what's happening here. This is one of my favorite things on here. So again, we talked about the 95% chance of getting a gap fill if it was to the downside. Now, I will say you did not get the perfect gap fill, did not take completely place from the daily close. But still, very interesting. You push down and then you push all the way back up. Literally into 494, literally like 2-3 cents off of filling the gap. Kind of incredible. Shout out to if you took that information and that data. It was also on Twitter. I posted it literally for y'all this morning, and it was really funny when I posted it. People were like trolling, like, what happened? I thought we were gonna pump, and then we pumped back up $4 or $5. Kind of jokes on you, buddy. So that's actually pretty hysterical. Now, when we look at equities, it's really important that you're watching which names are performing the best. Like going into today, I really liked Microsoft and AMD, but when you opened up, those names gave up all strength. I quickly realized that Apple was going to become probably my favorite name. I mentioned it in the live stream as well. I do think what they're doing with Vision Pro is kind of insane. A lot of you guys are going to say you hate it. It's this, it's that. But I think what Apple showcased to everyone is that they are the future of spatial computing. It's kind of the craziest concept I've ever seen. And I'd be lying if I said I didn't think the product was cool. It's really, I mean, if you really walk through the demo, it's actually like, it's literally the most insane thing I've ever seen. It is 110% the future, and it blows every other single competitor out of the water. I mean, literally the Vision Pro is revolutionary, and I guarantee the next version is probably going to be a little bit cheaper. It won't be the Pro version, and it's going to be more affordable, and it's probably going to be better. That's the craziest part here, and you're just getting started. So when we look at equities, just think of that in mind, right? You want to hold above key levels on the indexes, which you really didn't do until the end of the day here. And then you also want to see which names are strong versus which names are weak, i.e. Tesla. When I was going short, I wasn't going short on a name that was strong, like Meta, Amazon, or anything like that. Even though you could have made money there, it was easier to make money on Tesla. I think Discord can vouch for that as well. Just check down in the comments. Really quick, let's go over a few names. Number one, Apple. You pushed into target 1, you almost pushed into target 2 that we had up here. Now, I think Apple still looks good. Really what you want to see is holding above 187. And if you can get that bounce and hold above that, again, I really do believe Apple's going to start running like crazy with any type of momentum from the market. That's a personal opinion. Do your own DD, but yeah. Going into Microsoft, I do like what Microsoft is still doing, but you started showing weakness and you got below 407. Today in Discord Live, we talked about shorting below 409 into 407, and you really just gave that level up, flagged, rejected, and pushed down. So you want to see a remount of that level to get bullish once again. I still think they're a very strong company and will move good, but as long as you're below that level, I'm not looking to go long. I would be interested to see how you react from the $400 level and possibly even down here near 402, but until then, sitting on my hands here. Amazon, really bullish on the name still, but you have to be above 171. As long as you're below 171, I'm not looking to go long. So again, as you're down here, not interested whatsoever. You get a break, a retest, continuation. That's what I would like to see, and I'd be rubbing my hands all the way to the bank, dare I say. Going into something like Tesla. Tesla is still inherently the weakest name probably in the entire market. So you broke down obviously from the lows from Friday all the way down to 175, 174.9, give or take. Now you bounced all the way back up. You rejected from previous lows established on Friday, and it looks like you want to come back down. We'll have to wait and see till tomorrow. Tesla's 100% one of the weakest names out there, and I don't really see the upside just yet. It's going to take some time. I would not start forcing trades here. AMD, also love the name, but again, you got back below a key level, 174.6. You opened up really nice above your previous high, 178.8, and then you couldn't quite make it to and holding above 180. That was not ideal. That rejection from 180 was definitely gross. You're basically 1, 2, 3, 4 touches after you broke below the key level, and you're still getting rejected. If you remount 174.6, I think it's a good long, but until then, cannot touch it. That's what I'm looking at there. Netflix. You tried to hold your level. You broke through it today. You had a really nice push from 562 all the way to 575, and you can't break back above 576. That's the concerning part. You shot all the way back down. Crazy vol to move. Made money. Congratulations. And now you're just trending back on support. Not interested. Ugly. Scary. Don't want to touch it either. So you can see there's a lot of names here that even though I think, indexes are strong, some of these names, they're kind of wavering. But then again, a lot of these names are just consolidating at highs. Like NVIDIA, again, you're sitting almost back at 700 and you're going to keep probably pushing. Now, everyone's saying NVIDIA is a bubble, but the thing with NVIDIA right now is that every single week, more and more options get deeper in the money and they continue to roll over or they continue to execute. And that's just wild. And it's going to continue this trend as long as you keep, staying at these highs, unless something really bad happens in the market to where NVIDIA just gets forcibly sold off. That's the concern here. Again, really wild to think about. You went from 500 to 700 in a matter of like a month. Kind of crazy. Pretty bizarre. Congratulations, you've made money on that. Really happy to see it for all you guys as well. But right now, that's what I'm looking at on the broad market. NQ just opened back up. You want to see this hold above 17,715. That's ideal. If you hold that, I do think you're going to get continuation back into highs. The market's still inherently really bullish. And again, I think the story here is that earnings were great, and specifically earnings on tech stocks were fantastic. And that's what's keeping everyone excited right now. And that's what's keeping money flowing back into tech. Because even though the Dow is pulling back, even though ES is kind of pulling back but trying to hold as well, tech still looks great. What are people buying? They're buying that forward-looking guidance, right, of what Meta, Amazon, Microsoft, AMD, NVIDIA, Apple, etc. are all trying to promise to their investors, right? That more growth is sustainable. And if you get to the point to where you can keep this growth up until rate cuts come, you have to assume it will just accelerate even further from that point. A few thoughts. I still think the market, again, inherently bullish. You're holding a lot of the key levels. The bounce back that you had from lows today also was extremely impressive. It's like I keep saying, sellers get opportunities and then they just stop. We can see it clearly with the volume when we look at what's happening throughout the day as well. I don't really know what bad news could come out right now that would hurt the market. Think about it. Powell basically said on 60 Minutes that when the rates are coming is around June. He said, you're already at 2.9% and we don't have to get down to 2% to cut rates. His exact words, we are not cutting rates all the way down to 2%. We want inflation to basically trend around 2%, meaning they'll probably start cutting before then. And then they just want inflation to sit around that level. So they're probably going to tinker, meaning they'll probably cut some this year and they might raise again next year if inflation kind of persists going back and forth, which is normal in the market. You don't usually just cut, raise, cut. It's usually back and forth when you're doing this. Again, I know a lot of you just started trading stocks, so I'm here to help. Don't worry if you have questions, comment down below. I'll see you tomorrow. Have a good one, traders.